A lot of schadenfreude last year when the Bond King had a hard time, but you know what? Bond King's coming back. You can't keep a good man down. Well, anyhow, Kirsten Grind is here to tell us the story of Bill Gross.
Yes.
He's back and he's better than ever. Bill Gross. Try to make Bill Gross bad.
It's better than most.
Better than most.
Yeah. Well, it might be too soon to be calling the comeback yet, but still, obviously much better than last year.
Yeah. So we're talking about the first quarter. Bill Gross. What did he change? What did he buy in 2012 that's doing so well for him?
Well, interestingly, he's been buying a lot of agency-backed, mortgage-backed securities. So that's really been his big bet. He's increased over the last 6 months the holdings in his portfolio from like 38% in the fall of last year to about 52% now. So that's really where he's putting his bet behind. And
is this stuff that they're buying out on the open market?
That's a good question. You know, I think the strategy right now, they're trying to de-risk the total return fund, right? I mean, last year he made this disastrous bet on treasuries. Right. So this year they're really trying to move away from that.
So obviously he's one of the highest profile investors out there.
Yes.
Manages this huge bond fund. He's on TV all the time. Fed decision comes out, everyone watches him. How much credibility did he lose, and how many customers did he lose after last year's poor performance?
Well, he lost a lot of customers. He had outflows of $5 billion, which was actually the most since 1987.
Wow.
And when we were calling around about this, I was talking to financial advisors who really had a tough time convincing their clients to stay in the fund. So this quarter, he's actually seen inflows again. So it's obviously much better for his reputation.
That's interesting. I mean, you know, one bad year the guy has. Other fund managers have one bad year, and people don't.
You know, but this is Bill Gross.
Right. Is it because of the profile he has?
It was a pretty bad year. I mean, he sort of came out at the beginning of the year saying, we will never get into treasuries. They are the worst thing ever. And then treasuries embarked on this epic rally. So he pretty much couldn't have been more wrong, and that really lost a lot of customer confidence.
Which, of course, was ironic because what did he make his business on?
Right.
Bonds.
Exactly. So there are some threats, though, to his current strategy, which worked pretty well in the first quarter, but what could go wrong?
So a lot could go wrong. One is that he's betting that the Federal Reserve is going to keep buying mortgage bonds to pump up the market. He's also hoping that interest rates will actually stay low, which they've said they will through 2014, but of course that could change. And, you know, mortgage-backed securities really depend on that steady interest rate environment. So it is a risk. As it always is.
How much is the whole thing dependent upon the housing market? How the housing market
The housing market is always the X factor as well.
I mean, the spring selling season is a big time for the housing market.
Exactly.
If you don't see some real uptick in the housing market this spring, you lose whatever gains you had.
Exactly, yeah. So, I mean, the analysts, everyone's excited, right? It's been a good 3 months, but even Bill Gross is saying, look, I mean, it's been 3 months. Let's not get too excited yet. It's only just the first quarter of the year.
And how good was the performance? So it was horrific in 2011. How much better than the broader industry was it?
It wasn't like, it didn't blow you out of the water, right? I mean, it returned about 2.8%, and that was about a 2.5 percentage point gain over the benchmark. So it wasn't, I mean, it wasn't mind-blowing, but it was just so much better than last year that that's why everyone's so cheering.
Yeah. All right, Bill Gross.
Yes.
Big bets. Big bets. The guy knows. He always knows something. You know, that's the thing about it. All right, Kirsten Grind, thank you very much.
Thanks so much.